dollar gets weaker and inflation is going to go up higher when they lower interest rates. And you're going to see gold prices keep moving up. But gold didn't have a good day today. It was down some $35, 2,683. But again, it's still up $641 from when we made that forecast that this would be a golden year for gold. So it's still very positive on gold. Back to the oil prices, OPEC has trimmed its forecast for growth. There's a global slowdown going on.
In today's episode, we cover the latest market movements, gold's performance, and the shifting global economic landscape. Markets slid as inflation continues to weigh heavily on the economy. The U.S. Producer Price Index rose by 0.4% in November, catching Wall Street off guard and sparking fresh concerns. The NASDAQ fell. The Dow dropped over 230 points, and the S&P also closed in the red. Treasury yields climbed, signaling higher borrowing costs on the horizon, including for mortgages. With the Federal Reserve expected to cut interest rates by a quarter point next week, it's clear central banks worldwide are moving in sync, just like the ECB and Canada's recent rate cuts. Gerald Celente would say, it's one big club, and they're all playing the same game. Gold took a breather, dipping $35 to $2,683 per ounce, but holding strong gains for the year, up $641 since January. Bitcoin remains above $100,000, showing crypto's growing influence in financial markets. But as Celente often reminds us, if it wasn't for Bitcoin, all that money would have gone into gold. With rate cuts expected to weaken the dollar further, analysts see gold maintaining its upward trajectory as inflation and economic uncertainty persist. Commodities told a mixed story. Brent crude dropped to $73 a barrel as weaker demand overshadowed OPEC plus production cuts. Industrial commodities face similar struggles, reflecting a global slowdown in manufacturing. Still, the coordinated efforts of central banks to stimulate growth offer hope for some stability ahead. As Celente says, when all else fails, they'll print more money. But the real question is how long they can keep it up before inflation spirals further. For now, markets are navigating a delicate recovery with turbulence expected to continue. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button and check our exclusive deals with NordVPN, the fastest and most reliable VPN in the market to keep your data private. Enjoy the episode.
They call it the way it is. Writing in the Trends Journal, we see the markets being very productive. Not like this year, but very good next year, because Trump is going to do everything he can to keep boosting the economy. And the story. So, let's go into the story now. So the stocks fell because the inflation numbers came out today, and they were higher than expected. The NASDAQ was down 0.66. The S&P down 0.54. And the Dow fell some 234 points. So the producer price index, and that tracks wholesale prices, it went up 0.4%. The street expected 0.2%. And the Treasury yields jumped back up. So now you're going to start seeing those mortgage rates go back up too. But the Fed's meeting next week, and the bet is they're going to lower them interest rates. 25 basis points. And the other day, on the 11th, the 10th, Canada lowered theirs 50 basis points. And today, the ECB lowered their interest rates 25 basis points. So it's one big club. They're all lowering it. The United States isn't going to keep them up because it'll bring their currencies way down, just like the loonies going way down and the euro's going way down. So lower interest rates mean the dollar gets weaker and inflation is going to go up higher when they lower interest rates. And you're going to see gold prices keep moving up. But gold didn't have a good day today. It was down some 35 bucks, 2,683. But again, it's still up $641 from when we made that forecast that this would be a golden year for gold. So it's still very positive on gold. And again, when Trump came in, the whole game changed because he's very pro crypto, Bitcoin. When he got Bitcoin, it's down today, but it's still over 100K a coin, and it's pretty important, because if people weren't playing the Bitcoin market, they'd be putting the money into gold and the other cryptos. And Brent crude, despite OPEC Plus saying they're going to keep cutting production and whatever they're saying, demand is down, and it's only $73 a barrel. And what else we got here? Biden hits clean tech imports from China. President Biden yesterday unveiled steep new tariffs on imports of critical materials from China in its final effort to protect U.S. manufacturing from the Asian superpower's dominant clean tech industry. Wait a minute. It sounds like Trump. When Trump does this, they blast Trump for putting tariffs on. But when Biden puts the tariffs on, it's okay. And Biden quadrupled to 100% the tariff on Chinese electric vehicles and sharply raised levies on other Chinese clean tech parts. Yep. So again, this trade war is just going to keep continuing because China's doing its part too. And as we say, in the Bronx, payback's a bitch. China, it launched an antitrust probe into NVIDIA, and it's going to keep ramping up.
In today's news recap section of the episode, gold price faces strong headwinds ahead of Federal Reserve meeting. After testing resistance at $2,700 at the start of the week, gold is once again on the back foot as stubborn inflation takes its toll on expectations surrounding the Federal Reserve's easing cycle. The precious metal received a much-needed boost earlier this week as investors reacted to news that China's central bank resumed buying gold. After a 6-month break, data from the People's Bank of China showed it purchased 5 tons of gold in November. According to many analysts, the data underscores China's significant role in the gold market and highlights healthy central bank demand heading into 2018-2025. However, the precious metal continues to face near-term volatility as attention now shifts to the Federal Reserve's monetary policy meeting next week. According to the CME FedWatch tool, markets have fully priced in a 25 basis point rate cut following the Fed's final meeting of 2024. There is growing uncertainty regarding the duration of the current easing cycle in the new year. The gold market began selling off this week after the U.S. Labor Department reported that its headline producer price index rose 0.4% in November, following October's unrevised 0.3% reading. Over the last 12 months, headline wholesale inflation increased by 3.0%, well above the consensus of 2.5%, and October's upwardly revised 2.6% reading. The rise in wholesale inflation suggests that the threat to consumer prices remains elevated, which some economists say will discourage the U.S. central bank from raising interest rates. In its outlook earlier this week, analysts at Wells Fargo said they expect only one rate cut next year. Similarly, Bank of America recently forecasted just 2 rate cuts in 2025. Naeem Aslam, Chief Investment Officer at Zay Capital Markets, said gold. Investors should prepare for potential weakness next week as the Federal Reserve pares back rate cut expectations. Another analyst, Lukman Otanuga, is more neutral on gold, noting that the precious metal is caught in a tug of war. He added that while a hawkish Fed is negative for gold, the yellow metal still retains plenty of bullish momentum. Now we'll show you the best clips of the latest interview. But first, hit the like button, smash the subscribe button, and check the pinned comment because we're offering an exclusive discount on NordVPN, an essential tool for gold and silver stackers who value privacy and security. Make sure you keep your data private, especially if you're browsing investing related material. And if you want to learn how to stack and how you can benefit from the gold-silver ratio to make savvy investment decisions, check our guide at goldsilverstacks.com. Enjoy the episode.
Back to the oil prices, OPEC has trimmed its forecast for growth. There's a global slowdown going on. So that's it. When the panic of '08 came, and again, we took the domain name out in 2007, people forget what happened before then. I'll never forget driving around and you saw these trailers with a half of a prefab home on them everywhere, like 2003 to 2007. And we came out with it. We said, this thing is going to bust. Subprime mortgages. You got no money, got no job, you're deep in debt. Don't worry about it. Sign over here. We're the banksters. And when we go bust, by the way, they're going to bail us out like they did, $29 trillion, according to the Levy Institute. Hey, it's okay. So that's when they started buying up all of these homes. And the price of homes in America have gone up some 50% since the COVID war began 4 years ago. All right? And now it's almost 5 years ago. So people can't afford to buy a home. So the bigs now are buying up, building and buying up homes and renting them out to the plantation workers of Slavelandia. And again, the bigs keep getting bigger. Blackstone eyes $5 billion for life science. Merger of two major ad rivals would create the biggest ad agency in the world. Boliden in $1.5 billion deal for two mines. And again, earlier this week, Omnicrom acquired Interpublic, $13 billion. So the rich own everything. It's robber barons 2.0. Nothing different. So this is very important. This just came out. There's a big article in today's Haaretz. And boy, if Trump lives by his word, I will tell you, I will become a major supporter of Donald Trump. If, and as we used to say, if my aunt had balls, she'd be my uncle, you know. So if that's what if means, if he lives by his word. When asked if he trusts Netanyahu, Trump tells Time magazine, I don't trust anybody. Oh, great. So you don't trust anybody. But he goes on to say that I think the Middle East is the easier problem to handle than what's happening in Russia or Ukraine. Okay, I just want to say that up front. The Middle East is going to get solved. That'd be great. He said, I don't want to say that. When asked if Netanyahu produced assurances about the war's end, he said, I don't want to say that, but I think he feels confident I think he feels very confident in me, and I think he knows I want it to end.
What do you think about Gerald Celente's bullish stance on gold? Do you agree that it remains one of the top trends heading into 2025 despite the recent sell-off? Share your thoughts in the comments below. We'd love to hear your perspective. And don't forget to like, subscribe, and hit the notification bell to stay updated on all things gold, silver, and market trends. Thanks for watching, and we'll see you in the next video.